Let's start with the fact that there are two sides to this problem. Because as much as we'll always like to say access to mortgage is low, there is also an equally bigger other side to that conversation. As much as access is limited to a few people, it's also the fact that only a few people are ready to adopt mortgage. But before we get into the peculiarities of these two sides of the problem, let's look at what mortgage is. Or let's simply take it apart to look at the important parts of the mortgage system and how it is being influenced or how it influences the two sides of this problem. So a mortgage in itself is simply a loan that is structured for housing. And just as you would approach a bank to give you a loan for business, you would also approach a bank for mortgage to own a house. What makes it different from other forms of loan is that it is structured to quote unquote be convenient. So while a business loan will be 3, 4, or 5 years, mortgage takes as long as 15 to 30 years. So structured to make it convenient for payers. And to briefly explain how a mortgage works, let's look at it as a combination of 5 parts. The first of which is the principal. This is the amount of the loan, which in this case is the cost of the housing. You walk to your bank to say, I need this house, but I don't have enough. Buy it for me and I will pay it back. That initial amount, which is the total cost of the house, which is the amount the bank is going to lend you, is the principal. Then the second is interest, the amount you pay back to the bank for giving you the loan. This is the profit of the bank for giving you that credit. So the bank tells you, yes, we are going to buy this 50 million, 100 million, 500 million house for you, and you're going to pay it over 30 years, and this is the interest, which is going to be our profit on that loan. The next part, which is number 3, is down payment. Because for the bank to take you serious that you mean business, that you're not just there to come waste their time, they will need you to show a proof of seriousness, that you are worthy of that amount of credit, and also as a stake in the game, as equity, as a skin in the game, to be worthy of such credit. And the higher your down payment, the lower the amount of your principal. So your down payment is not only a show of worthiness, it is also the basis for the interest and how long it's going to take for you to pay back this loan. Then the next is amortization, which is a fancy grammar for saying payment plan. This is what will show the amount you've paid, the amount you are going to pay, how you are going to pay it, and what the payment goes to. So for every 2 naira you pay, 1 naira goes to the principal, 50 kobo goes to interest, and another 50 kobo goes to your stash away pot for payments such as property tax, local government levies, land use charge, because the bank knows that if anything were to happen and you are not able to fulfill your obligations to government, you are liable to repercussions that may limit your ability to pay back their money. So every payment you make, a part of it goes into that stash away pot for the bank to help you make those payments when the need arises. And the last part, which is foreclosure, is what happens when you cannot meet your obligations. Then the bank comes and take the housing back from you. But foreclosure doesn't happen where you are diligent and responsible to this obligation to pay back as at when due and within the terms of your amortization. So that is just a summary of all the various parts that make up mortgage and which captures in essence how mortgage works. And this brings us back to those two problems, one of which is low access and the second, low adoption. So let's start with why has mortgage experienced a very low adoption within Nigerians? The answer is simple. Mortgage is debt. And for a country with a culture of full ownership, of full cash payments, being indebted for 20, 30 years with the uncertainty of job security, the uncertainty of economic stability, the uncertainty of quality of life, and even low life expectancy. So before they see mortgage, what they see is debt. What they see is lack of job security. What they see most importantly is low level of income. Because to even qualify for this mortgage, there is need for down payment that most people's income do not give them the fortitude to meet up to. So there is the constantly nagging fear of losing the house that prevents you from even venturing to apply for a loan for the housing. And this is the summary of the cause of the low adoption, the low penetration, the low encouragement towards mortgage in Nigeria. And that brings us to the low access. Because in as much as these conditions, this consideration remains true for a lot of people, there are also certain cases where there are exceptions, but who regardless still do not qualify for mortgage. So let's start with the fact that mortgage needs a down payment and how the down payment is a direct result or a direct reflection of your level of income. Now let's just oppose that against the fact that the Nigerian economy is a low to middle income economy, of which a larger percentage of the population works within the informal sector, where first of all, income is poorly documented, and second, is too low for decent living. So even before negotiating interest rate comes into the conversation, the first consideration for the bank, which is the lender, is your ability to pay back. And by these standards of income level, of lack of job security, low life expectancy, and poor financial records, most people are already disqualified even before attempting. It's so bad that a salary of 600K no longer guarantees your access to mortgage. And to just illustrate this theory, let's walk through it together. Income is 600K. Let's be very prudent and put fueling and transportation at 100K, feeding 100K, black tax 50K, monthly equivalent of school fees 50K, utilities 50K. That's 400K already, excluding health, savings, or investment. So with a balance of 200K, if you pay 150, or let's be modest again, 120K for your mortgage, you are left with 80K. And this mathematics does not prove to the bank, does not convince the bank enough that you will not sacrifice that extra comfort for your mortgage. And this is the simple reason why a lot of people cannot access mortgage. Now, with all this grammar, there is one thing to pay attention to, and that is whether on the access side or on the adoption side, one thing remains common, and that is the poor economic situation. Income is too low, widespread economic uncertainty everywhere. And this, it doesn't matter whether you are the bank, the developer, or the home buyer. These conditions affect everybody equally. Then combine this with the effect of the positive and negative sentiment of full cash, full ownership housing. Then it will become clearer why the Nigerian housing crisis is a multidimensional crisis that does not only require a reduction of mortgage rate or just building and supplying free housing or simply blackmailing developers to reduce cost, but going deeper into making the economy about empowering individuals to solve and meet their physical, social, and economic needs very well as it fits their aspirations, realities, and also in dignity. This is why the most sustainable solution to the housing shortage is actually economic empowerment. This economic development, I dare say, must go beyond merely meeting revenue targets to planning and developing a sustainable economic framework, one that prioritizes the people and which builds and connects every form of physical, social, economic development to surround the prosperity and development of the people. This economic development plan must prioritize education and public engagement because it is not just enough to create policies or budgets. We must also discuss, carry along, and engage the people on why this month we are not building health infrastructure, we are building schools instead, and why next month we are building a flyover bridge, why we are stopping this decision to have that decision. It is important that the people are carried along so that they understand everything that pertains to their development, to their future, and to their well-being. Because it is around this understanding that we can then improve financial inclusion, that we can improve adoption of mortgage. And with better openness, acceptance, and adoption of mortgage, people become willing, become more open to data transparency. And as this economic development yields an increase in income, it becomes naturally easier for a lot more people to be able to access mortgage. I hope this helps.